Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Gold International Resources Corp. Limited, latest report. China Gold International Resources Corp. Limited is a gold and base metal mining company that provides various business services. The company's primary focus is on acquiring, exploring, developing, and mining mineral resources in China and Canada. The company has significant interests in two major mines: the Changshan Hao Gold Mine in Inner Mongolia, China, and the Jiama Copper-Gold Polymetallic Mine in Tibet, China. These mines produce a range of metals including copper, gold, molybdenum, silver, lead, and zinc. In addition to its mining operations, China Gold International Resources Corp. Limited also engages in logistics and transport-related businesses. This suggests that the company has a strong focus on supporting its mining activities with efficient supply chain management. Furthermore, the company operates as an issuer of bonds, indicating that it has a presence in the financial markets. It also holds investments through its investment holding activity, which allows it to diversify its revenue streams and manage risk. Overall, China Gold International Resources Corp. Limited's business operations span multiple sectors, including mining, logistics, finance, and investment. China Gold International Resources Corp. Limited, market capitalization of $60 billion, is significantly larger than the average industry peer of roughly $1 billion. This shows that China Gold International Resources Corp. Limited holds a significant advantage in their industry. China Gold International Resources Corp. Limited trades at a lower price-to-earnings ratio of 19 times and a higher price-to-book ratio of 3.51 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 39% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in the company's financial performance can be identified from various sources. Revenue growth is primarily driven by an increase in production and sales of gold and copper. The total gold production increased by 9%, while total copper production rose by 48%. Additionally, gold sales saw a significant increase of 24.7% due to a substantial rise in the realized average price per ounce. Copper sales also experienced growth, with a $42.83 million (COQ) and $212.34 million (YOY) increase. The company's revenue from Jiama Mine and CSH Mine saw notable increases due to higher copper and gold prices. Sales of gold doré bars to China National Gold Group Co., Limited, also experienced significant growth, increasing by 36% in 2025 compared to the previous year. Copper revenue increased by 75%, with sales of copper concentrate and other products to CNG rising from $505.1 million to $964.8 million. On the other hand, revenue decline is primarily attributed to a decrease in production levels. Total gold production decreased by 21%, while total copper production dropped by approximately 16%. The company also experienced a decline in ore processed at Jiama Mine, and a reduction in staff costs was not mentioned as a driver of revenue growth or decline. However, it's worth noting that there are no clear drivers of revenue decline mentioned in the provided sources. The net income of the company underwent significant changes between different periods. Initially, on page 12, it increased by $59.4 million from $68.3 million to $127.7 million. However, on page 13, there was a substantial increase of 625% in net income, rising from $65.3 million to $472.3 million. On page 30, the company's net income is not comparable to previous years due to the payment of a special dividend of $46.6 million. The profit margins also experienced notable changes. Although not explicitly stated on page 12, it can be inferred that the profit margin increased significantly due to a 266% rise in mine operating earnings, despite a 10% increase in cost of sales and a 73% increase in revenue. On page 13, there was a substantial increase of 378% in income from operations. However, on page 30, no previous year's profit margin is provided for comparison, but it is mentioned that the preceding financial year had a net profit margin of 30%. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash flows from operations have increased substantially, with $709,984 recorded in 2025 compared to $306,896 in 2024. This represents an increase of $376,990, demonstrating the company's enhanced efficiency and profitability. The operating cash inflow has also seen a notable rise, reaching $710 million in 2025. Furthermore, the net cash from operating activities has shown a significant improvement, with $143,119 recorded in 2025 compared to $121,419 in 2024. These figures collectively indicate that the company is generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The consistency of these results across various reports suggests that the company's efforts to improve its operational efficiency have been successful. While there may be some discrepancies in the data, the overall trend points towards a significant improvement in the company's ability to generate positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. According to the extracted summaries, the total liabilities decreased by $130,264 from $1,149,773 in 2024 to $1,019,509 in 2025. This reduction is also reflected in the decrease of bank loans from $633,666 to $422,467, and a total borrowings decrease of $209,367, 29.4%. Furthermore, the total debt at December 31, 2025 was $547,484, down from $743,103 in 2024. In terms of interest expenses, there has been a notable decrease. Interest expenses decreased by $3,586, 15.8%, from $22,390 to $18,804. Additionally, accrued interest expenses at December 31, 2025 were $848, down from $66 in 2024. These changes indicate that the company has made efforts to reduce its debt level and interest expenses, which is a positive trend for the company's financial health. The performance of various segments in the company's operations can be analyzed based on the provided data. The mine-produced gold segment stood out as a top performer, with significant revenue and profit before income tax figures of $338,473 million and $176,793 million respectively. In contrast, the mine-produced copper concentrate segment underperformed compared to its gold counterpart, with lower revenue and profit before income tax figures of $971,652 million and $388,516 million. This indicates a disparity in performance between these two segments. The overall mine segment also demonstrated strong growth, with a substantial increase in revenue from $246,946 in 2024 to $756,646 in the current period. The segment's mining operating earnings and profit before income tax were also notable at $186,920 and $100,078 respectively. However, the gold concentrate segment struggled to match the performance of the mine segment, with lower revenue and profit before income tax figures of $509,700 and $19,020 respectively. This suggests that there may be areas for improvement in this segment's operations. Management is optimistic about the company's future prospects, with several key initiatives underway. The resumption of operations at Jayama Mine, albeit at reduced capacity, marks a significant step forward in the company's growth strategy. Furthermore, the construction of Phase III Tailings Pond will increase daily processing capacity to 44,000 TPD by mid-2027, setting the stage for increased production and revenue. In terms of specific targets, management has provided separate production guidance for CSH and Jayama mines in 2026, indicating a focus on maximizing output from both operations. However, it's worth noting that the company is prioritizing slope stability and risk avoidance at CSH Gold Mine due to its nearing end of life. This cautious approach suggests that management is aware of the mine's limitations and is taking steps to mitigate potential risks. Overall, these developments suggest a proactive and forward-thinking approach to managing the company's operations and resources. The company has a history of paying dividends to its shareholders. According to the provided documentation, there is clear evidence that dividends have been paid out in previous years. Specifically, page 26 confirms that dividends paid, yes, with specific amounts listed for both controlling and non-controlling shareholders. Furthermore, the payment of dividends is also confirmed on page 30, which states a total amount declared for the year ended December 31, 2025, as $186,785,121. This demonstrates that the company has a consistent practice of distributing profits to its shareholders through dividend payments. In contrast, there is no mention or indication of share buybacks in the provided information. Therefore, it can be concluded that the company's primary method of returning value to its shareholders is through dividend payments rather than share repurchases. Concerns about inventory buildup have been raised, particularly with regards to gold in process inventory. According to the financial reports, gold in process inventory accounts for approximately 7.4% of total assets. This significant portion of assets requires estimations and assumptions to determine its exact quantity. The explicit mention of inventory buildup, yes, on page 61 further emphasizes these concerns. The presence of such a statement suggests that there are indeed issues with inventory management, which could have implications for the company's financial health and operational efficiency. That concludes the financial summary for China Gold International Resources Corp. Limited. Feel free to comment below, and I will be happy to answer them when possible.